do this, yeah, there should be lots of disclaimers popping up on your screen. Cool. All right, so let's go get straight into it. I am looking at I'm going to look at GU this morning. All right, I'm going to look at through the pins. We're going to start from the tippy top. All right. I did give you guys the analysis. I'm not sure if anyone was able to look at it over the weekend of how we broke down the Euro CHF trade. Okay, but we're going to go into it again and see whether we can find something again similar, something we can get involved in. All right. So this is GU. Okay. This is GBPUSD. Let me hit this button over here. Okay. And in regards to this pair, we can see that from all the way in here, we're talking about 2008. Okay. This market has been bearish. All right. It has been making lower lows and lower highs. All right. And I'm going to try and make sure that my lines ain't too overbearing. Okay, make sure we can have a nice clean looking chart. I don't want it too crazy. All right, so we're going to do that. And I'm also going to, so look, if we just pull this out, okay, now I'm going to put in a couple lines in here. I'm going to put this one in here also. Okay, this is 16. I've put in 3 different lines in there, right? Let me drop the size of them down because I don't want it to be too overbearing, all right? And all I'm doing is having a little guide of potentially what this market, has been doing, okay? I want to have a little guide, okay? Doesn't matter too much because we are up in here. So we're going all the way back into 2007 on the weekly. It's not going to necessarily affect us as day traders today, but it gives us some sort of guide of what's going on. Okay, now on a daily chart, we can see that this market was a bullish market. Can you see? It's pushing up here, boom, 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 tapped our trend line that we drew connecting previous data points and seemed to have a reaction to the point where now we can see structure on a daily time frame. This swing structure has been broken, and it's possible that this market's either going to make a retracement back into 50% level to continue on, breaking structure to the downside. Or maybe this market is doing something else, okay? Now, let me just identify a couple of little levels. First thing I'm going to identify is where exactly is 50% of this entire impulse, okay? 50% of this entire impulse is right up in a level that looks very interesting to me. Let me show you why it looks interesting to me. You ready? Have a look. It's a price point, an area of price that the market enjoyed. It enjoyed this price, okay? It enjoyed this price. It was previously used to tap that price. Have a look. I mean, I could put it all the way to over here if I wanted to. Okay. I don't like going back too far, but we can see it loving this price here, loving this price here, sitting on this price here, sitting on this price again, loving this price to finally breaking through this little area. So this is a point of interest for me. That doesn't mean that the market's definitely coming back to that 50% level, but it's definitely a point of interest. After this market has broken structure, the question is it going to be retracing back into these levels, boom, boom, before continuing its journey? That's a question I'm asking myself. Yeah, I don't know that that's what it's going to do for fact, but that is definitely a question that I'm asking myself. Okay, so just zoom in some more, see what's happening. When the market came down here, have a look, broke past some swing structure in here. Okay, broke past that swing structure in here, pushed all the way down here, and then it started to go sideways. The market has been going sideways in her, all right? You do that, get rid of that, make it a different color. The market has been kind of going sideways in here, all right? Kind of doing the hokey cokey right in here in this level. Now, we can also put in some more lines, some more guidelines, all right? So I'm gonna mark this here. And I'm going to just write in here 50% because I want to get rid of it. I want to get rid of my Fibonacci's because I don't want too many lines everywhere. Let's get with that. All right. So at the moment, the market's in this little area here, been kind of going sideways in here. We saw a break outside of that level, but it came and retraced all the way back down to 50% of that consolidation. And now we're seeing what's going on right here. Now, if I was to put in some further lines, like I said, here would be a trend line I'd put in. And I'm going to make it a bit brighter so we can actually see it. I'm going to do that. And I'm going to do this. And it's not even that bright. Let's do that. Okay, I'll put in these lines. The market was trading down within this range. I think we can all agree on that. Look, ping, pong, ping. And it's come up here. Made it, now, at the moment, right now, see, previously it was still within this trend line, but now we've broken outside of this range, this trend, bullishly. Okay, breaking structure. This is an indication of where it wants to go to, in my opinion. Okay. And then the market has come all the way down to 50%, but I can see good reasons of why it might have come all the way back down to 50%. Can anybody see any reasons why it might have decided to, after breaking up here, might have decided to come all the way back down to 50% of the level? Does anyone else see any reasons? Can anybody else see any good reasons why it might have decided to come all the way down in here and close up this whole area? I've just drawn it, so I've made it bait, okay?
Close the imbalance.
Close the imbalance. Good morning, my bro. They closed the imbalance. Okay, there was, as that push happened, it created a huge inefficiency in the market within this area between, you know, these candles in here. Now I've just done one big square, but you know, if I go to my 6 hour, 8 hour, you'll see one big gap. All right, so I can do two separate ones, but you know, it is what it is. So market's come all the way down here. So the question I'm asking myself right now, Monday, with this market that possibly may want to go and push up into that 50% level, is I'm looking at this right now, this impulse down, this correction after breaking this structure here, this correction. I'm looking to see if there's any sort of confirmation. I'm going to get any type of indication that this market actually now wants to start pushing up. Now I'm on the 15-minute time frame, and on the 15-minute time frame, I can remember the market's a fractal. I can also go in here and draw some lines. Okay, so if I do that, and I do this, and I slap this one over here, you know, the market was pushing down within this range, and at the moment right now, the market, as you can see, has broken outside of this range, this high over here, broken structure here. Okay, broken structure here, and currently, the question is this market going to just continue pushing up? Let's have a look on a smaller time frame. Let's have a look. Or let me get some more detail, zoom in, better still. The market has been, you know, trickling over here, trickling on a Friday. Obviously, markets are not even open over here, blah, blah, blah. But on this morning, we've seen it break structure over here, you know, and candles close above here. Now, I want to see whether this market's going to close up here or not. Okay, now if it closes above this high currently, this little wick high, you know, an aggressive entry would be saying that you think that this market's going to keep pushing up. Okay, someone who wants to be safer will place their stop below some other type of structure. In here, the structure is not great, and obviously the safest place you're going to place your stop is going to be below this swing low. Okay, now this identify this market right now as we are still, you know, trading within that little range. Yeah, like I said, this would be an early and aggressive entry on the basis that we're trying to get up to at least equal highs. But ultimately, maybe it's going to be today, tomorrow, Wednesday, Thursday, who knows, beyond these equal highs, because we may be trying to get up to that 50% level that we've identified in here, which is currently, you know, nearly 400 pips away. Okay, nearly 400 pips away. Okay, so ultimately, we're thinking to ourselves, okay, we can get into this trade early with our stop below this level, which would be below the 50% level of where it's, and after its broken structure, or we can wait until this market breaks above this high. If it breaks above this high, we'll be able to get a small enough entry. There's still a little push in here, but ultimately, you know, if we're saying, you know what, no, Jay, we only want to take the trade in the correct direction of what the overall market's doing, but then we're going to say, Jay, we don't want to get involved in the trade between Monday and, for example, Wednesday. We're going to wait till this trade gets up in here because we want to get involved with the sell. Yeah, like so. If this is going to be your best case scenario, stop above the highs on the basis that we want to get in this trade, at least getting down to equal lows over here and potentially beyond. But this is a much longer outlook. Okay, I'm just showing you this is the structure, but this is a longer outlook because we also know the average daily range of how much on average GU moves. If we don't know, we can Google it. So therefore, when we're looking at a move all the way down here for 2,000 pips, we know that's not happening today. Yeah, so if we're looking about taking trades today, we have to understand what may be happening right now today in the market. And I believe this might happen right now today in the market. And there may be an opportunity right now to be able to get into the trade. All right. Let me try and click this link here. Oops. 1 second. Open that back up. 1 second. Open that up. Sorry, guys. Let's go over here. Apologies. Can you see my screen again? Should be able to see my screen.
Yeah, I can see your screen, bro.
Okay, apologies for that. So yes, I am looking over here to see a potential early entry, all right, out of this level. Now, I don't want to just hit the button. What we can also do is we can try and add some other little areas of some confluence and some understanding. So the first thing we can go and start having a look at is the Dixie and the Bixie, all right? So the DXY and the BXY, all right? So let's go and have a look at the DXY, okay? Let's go and click that. Let's go and have a look at the DXY. See what's going on with the DXY, okay? So the DXY is the dollar index, gives us some sort of indication of what we think that the dollar might be doing, okay? So let's zoom out. Let's look at it on a smaller time frame. Look, so on a short, in my opinion, look, just looking at this, guys, this immediately, let me see whose brain's activated. What do you think about this immediately? I'm on a 4-hour time frame. Does this market look bullish or bearish? Quickly, just quickly. Let's see, snaps, quick fire. Make a summary of what's going on here. Quick fire, let's go. No, nobody ain't got the quick fire. Maybe everyone's busy.
Bearish.
Yeah, I think so as well. I think this market came up here. It pushed up into this level over here. The market kind of did the hokey cokey in here, not too sure what it wanted to do. What's making ever so slightly lower highs and lower lows, ever so slightly. And then I can see a huge indication of where the market wants to go. It wants to go down here because it went boom, it broke past this structure, boom, broke outside of this little ugly range. But then what did it need to do? Just like we saw on the other side, on the GU on a smaller time frame, it pushed back up in here to close the inefficiency that it made. Boom. But right now I'm looking at it. To me, it looks like that inefficiency's closed now. It's like it's closed that door, and there's a very high possibility from what it has done, in my opinion, that this market went boom, and it's ready to start going boom. That's what it looks like to me, just on a very, very quick snap fire, understanding market structure, seeing this market was coming up here bullishly, went sideways, made an indication to the downside with a huge impulse here, with this big old push on a 4-hour candle plus 4, 2, 3, 4, 5, 6, maybe 24 hours of bearish action. Boom. That was closed up by this bullish impulse correction to now be able to see this market come in here and to see some sort of break of structure of a continuation of this market trying to get down to equal lows and beyond. So that what that means is that the dollar may be losing strength. So if the dollar may be losing strength, then this market may be getting bullish. All right, so that's one little confirmation back in. Let's go and have a look at the BXY as well. See what the BXY may be doing. Okay, because like I said, all these things in isolation are not necessarily confirmations of what's going on in isolation. Okay, it's about adding them all together to be able to come to a bigger scenario. Now, look, for me personally, this British pound, as we know, has been bearish. And the market has come and boom, had a bearish push. But once again, just like the GU, very identical to the GU, it's broken this market structure over here, this swing low, okay? And then there's a very high probability, in my opinion, that the market may decide that it wants to make a little bit of a retracement back up into the 50% level of this impulse, which would be the dollar gaining some strength, yeah? So the pound gaining some strength to push up into this level. So it looks like to me, the market is pushing down here. It's gone sideways. It's made an indication of where it wanted to go to, which is doing it's very similar to the GU that we've already identified. So that's giving me 3 different resources showing me that GU could potentially get bullish, at least short term, back up into these levels, at least short term for approximately 400 pips. Okay. So personally, guys, I'm letting you know that based upon my analysis, based upon understanding the markets, going to be interested in buying this market, at least until we get up into those levels. I'm going to be interested in buying this market, at least until we get up into those levels. Now, if for whatever reason the market does something else, because it's very possible, the market can do what the hell it wants to go and do. If the market does whatever it wants to go and do and doesn't decide to do that, then cool, I'll reassess. But at the moment, I've got the dollar index showing me something that it may lose strength. I've got the pound index showing me that it may gain strength. And I've got GU itself breaking structure, breaking outside the market, looking like it wants to get bullish. Like I am, I've got my opinions of it. Okay. Now on a smaller time frame, that market has already started to break some structure. Okay. I literally right now I am waiting for a close because it's Monday as well. So the only thing that throws a little span in the works is Monday. And what do we mean by that? We mean that the world was still going on. Even though the markets were shut, the world was still turning over the weekend. Okay, so therefore Mondays, you hear a lot of traders say they don't want to trade on Mondays because Monday can add an element of uncertainty, and not even just volatility, but just, people use the word volatility of everything, but just the market's not doing not keeping to the program on the basis that the technicals were saying one thing and something else was saying one thing, but over the weekend, something else happened. Over the weekend, something that people couldn't predict, that they couldn't factor in, that the algorithms couldn't factor in, that the big man in this couldn't factor in. Do you understand what I'm saying? So that's why some people say Mondays they don't trade, because Monday's trying to play catch up of Saturday and Sunday. Okay, so personally, I'd like to see a close above this little high here, and I'm willing to take an aggressive little entry on potentially this market pushing up. Now, what does that mean? That means that the market might, even if I took very aggressive, even if I did this, let me show you. If I did this for 15 pips, this is market close up in here, understand that I understand that small entry could definitely give me blue straight away, but it puts me in high risk of the market deciding, like, for example, look at this. I'm looking over here left, some imbalance in here, in the little area in here. Yeah, I might hit that button for a small entry and it might do this. Yep, and I'm laughing my head off straight away saying, look at this, guys, I'm amazing. And then we might see this happen before this market further continues. So what I could say is this: if I do choose to take an aggressive entry, I need to take the money that's put on the table and be very, very sensitive to when any type of market structure breaks on a smaller time frame. Okay. Not be thinking to myself that straight away here now it's just going to continue to go to space. It'd be great if it did, but it might not. Okay. And obviously the safer trade is below this swing low for, what's that? 60 pips. All right. That's the safer trade. Now, why would you want to take a big 60 pip zone on GU when everybody else on Instagram are taking 1 pips and 2 pips? Well, because the bigger picture is this market getting up to equal highs over here. Okay. And then beyond, which is up into this 50% level, which if it gets up into these levels, that's still a 1 to 6 trade. That's a tremendous trade to start your week. Even if we get to these equal highs, that's a 1 to 3 level trade. That's still a great trade to start your week. And that's the safest bet. If this market starts breaking down below this level, breaking the structure and doing something, it's doing something else and you're wrong. Do you understand what I'm saying? You're doing something else. It's doing something else and you're wrong. And it's fine to be wrong. The worst thing is you getting stopped out and you're not wrong. That's what's worse, is you actually getting stopped out here, look. And then you're not wrong, and then this goes to the moon. That's what's painful. So therefore, like I said, I'm making it very clear. If I was writing it in a textbook, I'd be saying that your stop must go here. All right? But I'm allowing you to, I'm letting you understand that on a smaller time frame, those scalpers, those people that are a bit more comfortable with market structure, understanding or getting in and out of trades, a little bit more hardened to, if they lose a trade, it doesn't affect them, that know how to manage their risk so that they're only risking what they're willing to lose here. Maybe turning around and saying that I'm going to get into this trade as soon as that closes above this level in here, and I'm taking it below the last low. This is a 15-minute little low in here. It's not gorgeous, but it is a 15-minute low. And if you can't see it, you'd be able to look at your line chart and see what's going on. Yeah, it's 15-minute little valley in here. Okay, but like I said, which is really where your stop should go, to 60 pips. Okay, but don't say I didn't show you how the more aggressive entry would be. and this is the safer entry. I don't believe there's even a safer entry past this point either, because I just think to myself, I wouldn't really expect this market to come down further than 50% of the consolidation level. And if it does, it's really playing silly buggers, and then you should just sit back and wait for a little bit. So I've got an alert in here. Now, it's going to be more interesting. If this comes down and breaks this structure below, then there may be a level in here after it breaks the structure below and turns back around. But at the moment, there is not that level. It doesn't exist. Okay, so if it comes down here, breaks the structure, and then turns around and closes back above, that's different. And that would be a medium level to put your stop. Obviously, an aggressive one would be whichever the last retracement is, the last little valley, and the safer one would still be down here. But at the moment, I am waiting. I've got an alert. If you want to see my alert lines, boom, above this high, and I've got alert below here just to let me know if it's doing something different. And I'm happy with this. I'm waiting. I'm going to be waiting patiently. And to be perfectly honest, it's probably going to ring whilst we're on the session. My alert's probably going to go off whilst we're on the session. Okay, let's go over in here and let's look at US 30. Okay, it's more than likely could be doing something similar. Okay, or it may have already done it. Okay, so in my opinion, US 30's already kind of done it because they are cousins. All right, they do share some energy. GU to US 30. All right, should we check that? We can put plus, put GBPUSD, slap it on top. Okay, can you see? They do share the same kind of energies. They're cousins. Look, when one's going up, the other one's kind of going up. One's going down, the other one's kind of going down. One's going up, the other one's kind of going up. One's pushing down, the other one's kind of pushing down. You see, but US 30 looks like it might have already made that retracement back up to 50% of this impulse. Okay, that broke the structure and broke this swing structure. And GU may have not done it yet. Maybe looking to do it afterwards. Can you see that? Can you see how quickly and easily he was able to, overlay these pairs and be able to make some sort of conclusions of what's going on? I mean, it's unlikely. I'm not trying to say that, things might not change, but it's unlikely now all of a sudden, just as you decided to look at the charts, when this starts to go up, this other one starts to go down, because ultimately it hasn't been doing that. They've been following each other. Not a mirror image. I'm sure one does it moves before another. One's a little bit more sensitive to certain news than other, but generally they're doing the same thing. So right now, if you're telling me, yeah, Jay, I'm in a trade for the sell in GU and for the buy in US 30 over the next couple of days, I'm gonna be like, you sure? I'm not trying to say that it's not possible, because it might be possible. You may have analyzed it and there's been a bit of a separation between the two pairs, but buy and buy, I'm like, they kind of move the same. So, I mean, maybe you should be buying one and buying the other, or just buying one or the other, not both of them, not hedging, not placing all, being highly leveraged in an asset, which they both kind of affect each other. Okay. But for me right now, like I said, US 30 is already kicked back up into this level and GU hasn't. So let's go and have a closer look at the US 30, meaning that separation could occur, whereby now you're selling US 30 and you're buying GU, but you're only buying GU temporarily, and US 30 you're probably holding for the sell for a longer duration of time. Okay, so like I said, there is that separation because one may do the thing before the other. All right, so have a look. This market came up here, tapped into our level. All right, and then we started to see the market make a low, make a lower high, make a lower low, breaking this structure in here, make a lower high, make a lower low, breaking this swing structure over here. And then it came back over here and has pushed above that previous high to the top of the range. But let's have a look. I'm going to go and grab this. I'm going to go from the top here all the way down here. And we can see this kind of area here is kind of around this kind of 50% area. Now, in my opinion, this little 50% area has got some other concerns above it that might make it stray above that 50%. Go to that the 618 or whatever it may be. And this is, look at all this imbalance, all right, with a H. Now look at all of this imbalance in these levels in here. This is all imbalance that might need to get closed on the daily time frame. And the market is pushed into this. So right now, my outlook for US 30 is, even though I just said in regards to GU and US 30, is kind of for the sell if I can see a break of structure. All right, it's not yet. It's not ready yet, because this market structure at the moment here has made this high, made this low level high. It's like, realistically, if you really wanted to go there on a smaller time frame, have a look at it in a smaller time frame. Came up to that level, started to do the hokey cokey consolidation, actually broke down below, capturing the liquidity from underneath here on Friday, that's taking the mick out of people, okay? Because people thought, yeah, it's ready to go. And then it went, zoop, stopped them all out. And then it captured the liquidity above here, and it may even want to push up further into this level here. But personally here, I am looking at this market and I'm thinking to myself, you know what? There are some other concerns I can see also in here, some imbalances up in here also, that for whatever reason, the market just wants to play silly buggers and push quite deep, especially it being a Monday. You know, I am still quite interested to see this market break structure to the downside and get in here for the sell. Or because they're both doing the similar things, this might be the case. Are you ready? Because we just analyzed the dollar index, the GU, etc., and we said that they both want to make a bullish impulse potentially, or maybe just to play silly buggers, forget about my green line, which is just a trend line I drawn on the screen. Maybe this market also wants to have a little push up in here first. Look at this in these levels in here, which will make it fall in line with the GU also before going to hell. Okay, so we have to be conscious of that. Personally, with the the US 30, I'm not going to be in any way, shape, or form trying to buy this market until we clear this area, this kind of area. I want to sell this market. It's the only thing I'm interested in, but I've got a feeling that in line with GU, we might see it being stubborn on a Monday and pushing up into these levels before decided to turn over. Okay, remember our trend line that we drew here is just a line on the screen. This is just a line on the screen giving us a guide. And at any moment in time, the market can change that angle. Can decide, you know what, boom, we want to go back up in here. Once it doesn't break above this swing high over here, we are still bearish. Yeah? Swing low. We are still bearish. So maybe this market wants to do that in line. So that is definitely how I'm looking at this. I want to sell this market, but I think it might buy up. It's possible that this could buy up first. This is still this is like 400 pips. Just like the GU is just about 400 pips. So we might see this push happen first, once it doesn't break above these levels in here, all right, before it decides to turn over. That's my thought. That's what my thoughts about it. Nas should be able to. Nas may give us a clearer overview of, the markets, but it's going to be similar again. All right, let's have a look. What I'm writing. Let's grab it. All right. So once again, see, Nas is slightly more ahead. Nas is definitely violated this high. Definitely violated this high over here. Definitely broken outside of our blue trend. Okay. And I'm a little bit more concerned by this push of Nas here. But can anybody see any great reasons why that market might want to come down, at least for the short term? All right, of what Nas has done. Can anybody else see some great reasons of why that market might want to, get bearish? Can anybody see it? I'm just cleaning up my chart if you're seeing me delete stuff. I'm not trying to give you a hint. Can anybody see any great reasons of why that Nas market might push down first? Also, for approximately 400 pips.
Close imbalance.
Exactly. You understand what I'm saying? So even you see how they're different, but they're all kind of the same but different. This is us looking at various different pairs and we're seeing it and we're thinking to ourselves, now the question is this an indication of where it wants to go? And then this is going to be the correction for this market to continue going up? Or was this some sort of manipulation and some big old push of what was happening last week? We know last week was active. We know there was lots of stuff going on. I'm going to lead to the latter. That this was just some sort of push based upon the news, based upon whatever. This at the moment, this market hasn't broken. It's broken this swing high. It has. Okay. I'm a bit more concerned in the Nas. I'm a bit more concerned about it now. Like this whole little section, I'm a bit more concerned about. I'm not going to lie to you. All right. Because here it was making equal highs over here. And then boom, this little push over here. A bit more of a concern. Even though I think the market's going to be bearish first, that's to some capacity. It's a bit more of a concern here. It's a bit uglier. Okay. It's a bit uglier. Let me zoom right in and see what's happening right now. Right now, the hour time frame, have a look. This market has had a little push down here. We go to the 15-minute time frame. It got to this little low this level of structure here. So this is definitely 15-minute structure here. And the market is just thinking about it. Yeah, maybe it's Monday, it's trying to suck people in. It's just thinking about it over here. So in my opinion, it hasn't really broken that 15-minute swing structure, because if I was to put some lines in here, connecting some of the data points, it would look like that. Okay, it would look like that. Then the market was pushing up in that impulse like that. So therefore, the last swing low, the last low that's touching on my trend line would be over here, and we haven't broken that area. So that ultimately, the market currently is trading within here and here. Okay, that's what it's doing. It's trading within here and here. So like I said, NAS is a little less attractive in regards to just the structure, because of this potential manipulation or news, or this huge impulse boom here. It's a bit of a concern, because at this level here, we were still kind of at an equal high over here. Look, I was still kind of thinking to myself that, we're still kind of at this equal high. So structurally, we're still kind of intact over here. I was thinking, yeah, now we're right at the top. That's a double top here. We might see it breaking here. But ultimately, the market came and captured that liquidity straight away. Boom. Captured it on Friday. This liquidity above these equal highs here and here. It captured it and closed this imbalance immediately. Yeah. So in my opinion, like I said, after capturing the liquidity, this market wants to run up. Like I said, I'm still here. Still my energy's up. But potentially this market will sell it off. Okay. However, it's just not as attractive. Okay. So you recall all the things that I've said, hold me accountable. You can go and review it. I'm looking at this as potentially for the sell. I am concerned by this structure. The US 30's got a bit more cleaner structure, in my opinion, a bit more, it's still in check, but we might see it push up in here first into some imbalance levels before further coming down. This would be doing the exact same thing that NAS has done and not respecting this equal high over here, all right, and pushing up again. And GU, I feel that this market wants to push up, at least potentially to this 50% level, all the way up here. But if we get into that trade, first and foremost, we are looking at structure. Yeah, we are looking at structure. Okay, in regards to that trade, because that is a big trade, and obviously we want to big trade for GU. We want to understand on average, how much does GU move? Now there are indicators for this, or you can Google it, but let's just put like daily range for. Just try and find an actual site. I keep forgetting to bookmark a good old average daily range site. It's not you. Yeah, you just look ugly. Who is it? Or maybe we should look at the average true range, but this is a technical indicator that's trying to show me. It's on a website showing it to us. Have I just clicked this already? I'm sure I did bookmark one, I'm sure I did. My apologies, guys, but let's just find a good one that we can average daily range calculator. So here, when we go and find, this is taking the average over the last 10 weeks, and we go and look for GU, it's saying about 90 pips. Yeah, it's saying about 90 pips. Okay, let's make it a bit more sensitive. Not 3 weeks. Let's just go last. It doesn't matter really. Either way, around about 90 pips. Okay, so therefore, this market getting all the way up here for 400 pips might take a whole week. It might take 4 or 5 days. You see? You understand the maths? It might take about 4 or 5 days. Maybe not. Maybe there's something else compelling. Yeah, there's maybe some huge compelling reason why this market just does something outside of the average.
Yeah, Jay, CPI this week, American CPI say it's going to do something crazy. I think it's tomorrow or Wednesday.
There you go. You see? But this is the reason why we analyze things in the way we do. But we're now flicking over here to understand what's going on. Today looks quite quiet. All right, but look, tomorrow, red folder news, CPI, everything popping off. And this may be a reason why this market does something a little bit outside of the average. Now, how else can we go and look at these things? Now, look, based upon this CPI data here, we can obviously click into here, have a look. We can go to history. We can go and look at when the last CPI data came out. All right, 12th of October. Yeah, and the one before that was the 13th of September. And then if we wanted to, because we're geniuses, we're just, we're absolute geniuses, we can go to the 12th of October. This was the 12th of October over here. Can you see? 12th of October. Have a look at Wagwan. That was 100. Let's go to the daily, in fact. Let's go to the 12th of October on the daily. Here we are in that range over here. That, if you can see here, guys, as well. Another thing here is, I'm going to show you that way. So look, have a look at this daily candle. 160 pips. Okay, nearly double. Yeah, nearly double of what it does on average. Yeah, nearly double. So yeah, it could get this in this direction, and a lot quicker than the average. All right, than the average. I hope you understood that whole analysis of how I did that, why I did that, how I used the Dixie, how we used the British index, how we looked at the average daily range. And if this market does something else and starts coming down here and breaking structure, let me tell you something. I don't lose no sleep, It's not going to be, Jay don't always talk about he's dumb, because my money's in my pocket. I'm like the weatherman that says to you that today it's going to rain, and then you wake up in the morning and the sun is beating. He doesn't feel like an idiot. He gave you an analysis based upon the information he had. If some massive weather front came and rolled in and blew those clouds out of the way and the sun was shining, he's not handing in his resignation. He's analyzing the markets based upon the information that he has. And if something else changes and all of a sudden now there's no longer clouds hovering over London, then he gives you a different breakdown. He breaks it down differently and says, yeah, this is what's going on. Yeah. Let me open up my cashback forex. So I feel like I want to take an aggressive venture. We're going to break that high right now in the GU, and I feel like I want to get my week rolling. And I'll take it, and I might place my stop all the way down below the lows. I may do secure it in and just see it rolling very slowly. But we understand that yes, it's going to be a volatile week. There's CPI tomorrow, and I'm just watching that trade right now as it moves.
And there's UK CPI on Wednesday, Jay.
Oof. And there's UK CPI on Wednesday. So Alan is giving us all the information that we need. Yeah, and if you can see here, like I said, I was waiting for that to go and close above air. On a 5-minute time frame, there's still 2.5 minutes before it closes. Okay, on a 4-minute, it's closed already. On a 3-minute, it's closed already. On a 2-minute, it's closed already, obviously. And on a 1 minute, it's closed already above this little level in here. And I feel like I want to get involved in a very aggressive entry over here, just to get my week juggling, just to get my juices flowing. All right, just how I trade. I like to get it popping. All right. But I'm going to wait for that 5-minute candle to close in the next 2 minutes or so and see what's going on. But I'm actually monitoring on a smaller time frame. I'm seeing it coming and closing this little imbalance that it made from that little push. And it'd be interesting to see if in the next 1 minute and 52 seconds, if we do close above, which I think we will. I'm just trying to be good because I've got you guys on a call right now, trying to make sure that we have some patience. Got 45 seconds for a minute candle to close. And we've got 1 minute and 40 for this candle to close. And I'm watching it. You know, I am watching it. This distance here, for anybody who wants to know, from here below this 5-minute swing low is approximately 15 pips. Okay. And we are watching things. Remember, it's Monday, and like Al just said, lots of volatility going on. Okay, and we shall see in the next 1 minute and 7 seconds where that closes. Let's have a look at NAS. Let's look at it on a smaller time frame of what's going on here. Like I said, it's still doing the hokey cokey in here. NAS isn't very attractive to me at the moment. US 30 is more attractive than NAS to me at the moment. But I'm concerned whether or not, see here, the question I'm asking myself about this is, are we going to close above here? Meaning that it does want to do this first, or has it already pushed up? I personally think this is what it wants to do first. All right. We might see that, might see it come back down, close the same balance, and do something else, but we shall see. Or we shall see. Ultimately, we know that we prefer to be in this trade for the sell. Okay. I thought I put it on here, but maybe I put it on the wrong thingy-majig. On the one that is an anchored text. Ultimately, we want to be in this for the sell. Yeah. However, we are a bit concerned by some breaks of swing structure, and it's a bit concerning. This is a bit iffy. All right, it's a bit iffy, and we might see this market push up first into some of these levels. And this is a big push. Don't get twisted. So when you start seeing this going up for the next couple of days, we're like, oh, Jay said we're going to sell it. No, we might see this happen first. Okay, but overall, this market has tapped into the top end of that range, that pink line, and it started to break structure to the downside, making lower lows, lower highs, lower lows, lower highs. And ultimately, this market may continue doing so. It's just when. When is the questione? All right. On the 5 minute time frame, let's have a look. That candle didn't quite close above. Let's have a look on GU. Look, it didn't quite close above. It closed down here. This is this wick action. So I'm going to stay patient. I'm going to stay patient. I want to see it close above here on a 5 minute time frame. 3 minute, yeah, we had a little close. And it came and closed the imbalance. So maybe it just wanted to close the imbalance. So I want to see a close above this level, even if it's on a smaller time frame, 2 minute or 1 minute. All right, because from a 5 minute perspective, I understand that we push wicked up here, which is this wick is a break of this structure. Don't get twisted. It is. It's a break. Yeah, if this was winning 10 nil, or to say 10 had 10 points, and I came and got up here for 11 points, I'm still, I've broken this level. I've broken the 10 point mark. That has happened, yeah. But I understand on a smaller time frame, the reason why the market came back down here is to close up inefficiencies. So therefore, I just want to see a close back above here. If it's on the if it synchronizes with the 5 minutes, great. But ultimately, I want to see a close above here without it breaking previous structure. If this now comes down here and breaks this previous structure, then it voids me saying I just want to close above here. Okay, so I'm waiting and I'm patient. My money is still in my pocket. All right, now I hope you understand that. I'm going to pop an alert over here, add an alert, cross up. Let's look at something just to finish up that is not on the same kind of island as GU, US 30, NAS. They're all on the same kind of island, all right? So I'm going to go over here and I'm going to hit the button for, let's go and check out gold. Even gold is same island. Let's go have a glimpse at gold. Not a glimpse, a glimpse with an L. Again, guys, gold is doing that, it's doing that. I've got triple highs over here. I really want to take this liquidity and make all-time highs. There is wars going on and people are very concerned about their investments, and I am a safe haven asset. However, in the meantime, I just want to do the hokey cokey and tease, and I'm just not too sure exactly when I really want to start making that run bullish to go and capture that liquidity. Yeah, we can see how the market's broken structure over here. Smash. Yeah, so therefore this little retracement might be going where? Might be going where?
50%.
Yeah, it might be. It's not for sure, but it might be coming back into this kind of area. And I'm making it a nice big area because it don't really know. Might be coming back into this area before deciding it wants to actually continue and push up. It might be. I identified some areas beforehand that's still sitting in here. Can you see this little level in here, all the way down here when it broke some structure over in here? Okay. And the market that broke the structure here, we can see how it broke the structure, and it really came and this is that area. It's begging for me to hit the button. All right. And yeah, I like the fact that we've had a little 3 minute closure there, and I'm willing to get in. All right, I'm willing to get in and see what happens with it as my first trade Monday to see what happens with it, and I'll just leave that ball rolling. Okay. Yeah. All right, let's go over here at XAUUSD. Like I said to you, I personally think this market may be trickling down into these levels here. And if I look left, if I go to my, 1 hour time frame or 4 hour time frame, I can see some reasons why this market might be coming down here. All right, we can see some imbalances in here. We can see this is a level where the market broke some. I'm gonna say this is mostly imbalance in here. Like I said, I prefer this level down here that I've got marked up, where we've seen this huge impulse push breaking this previous structure over here. I do prefer that. But at the moment, I'm not in a rush to do anything with gold. All right, I wouldn't be in a rush to do anything with gold because I personally think it's made an indication of where it wants to go.
On the daily time frame on the gold, hasn't it got the liquidity at the top there?
100%. This is it right here. Serious liquidity sitting over there. Serious liquidity. A triple top, which is even rarer than the double top. It's got this. Here's the area. Where are we? Excuse my little. Like this is all. It will be breaking all-time highs if it goes up into these levels. We're talking about gold going to, I don't know, 2100. Okay, like yes, 100%. And that's why this whole angle, you can see I've got this pink angle of this market pushing up here, coming back down here. But it's just like, it's come up here before and made a double top. And then it's come up here before, made a triple top, and then made this retracement. So at the moment, like I said to you, I definitely would prefer to be in here for the buy. Yeah, definitely would prefer to be in gold for the buy. There is some liquidity that's even sitting down below these levels as well, over here. There's some double bottoms over there. There's a double bottom here between here and here. And I think right now gold is definitely a more sophisticated, it's more factors dictating why gold is, dancing around here and whatever it may be. But at the moment, if we zoom in some more of what's happening now, we're not going all the way back to like start of the year. The market was down here at the bottom of our range. Look how easy we would have spotted that bottom of the range. We would have pulled out our parallel lines, boom, boom, seen the data points, and smashed past previous structure. There were little soldiers here, smashed past that area. Look, remember our analogies. Remember how we remember this thing. We had all our little troopers over here. They were previous soldiers. That when the market came up here, they said, move. And the market came back up here, they said, move, and slapped it all the way down here to the point where it broke structure. And then from down here, these guys said, listen, we've had enough. Yeah, we've had enough oppression. Yeah, we've had enough. And they decided to rally all their energies and not only push back up into the top of the range, but push past their previous oppressors. Smash. And when they smashed past there, they were so happy and jubilant. But Brenda was the voice of reason and made sure they said, listen, we need to go back and check that there's none of these enemy combatants, that they're not still alive, that they're not still here, that they're not going to come up the back of us and do us some damage. So the market has made that retracement or correction from this indication back down into these levels, which I think may get quite deep. It may push all the way back down here because Brenda is proper cautious. She's not only cautious about the battlefield of where they broke, but she's cautious about some previous, structures that she saw around here, some previous, residential houses that there might be some guys living in here. So I think the market might push all the way down in here. It may do. I don't know. I have no crystal ball. Before further then Brenda saying, you know what, fine, now let's continue our journey and hopefully go and capture this liquidity all the way up here. Okay, so I am definitely, personally, I would like to be in here for the buy. Yeah, I would personally like to be in here for the buy. The question is when? When would I like to be there? And I can't get in here until I see a break of structure of this bearish impulse. Look, the market has been bearish, coming down here, making lower lows. Sorry, my chart's getting a little bit messy because this is a previous chart. Let me try and clean it up a bit. All right. But this market has been bearish, all right, making lower lows on a daily time frame and lower highs. So even though I'm talking about all this buy talk, the market has been making lower lows, lower highs, lower lows, and it might continue to do that, lower highs and lower lows back down until it gets into these levels. It's only now approaching this 50% level of the impulse, and I've identified this little zone over here that the market might tap into. So ultimately, I don't want to be buying it until it breaks outside of this trend. Yeah. And even more so if I get the confluence of it breaks outside this trend after tapping into the areas of interest that I'm interested in, which is this 50% level over here, this green line, and this kind of area here after this imbalance is closed, and the area where it broke past some of the some troopers is closed over here. So yes, I agree. I agree that, you know, I'm bullish on gold. And right now there's a correction that's happening after breaking some structure. I hope you understand everything I've said and I've gone through. Okay, have a look at the GU. Yeah, so I'm up. I'm in the blue at the moment. I can't quite buy a Lamborghini on it. All right. However, it's rolling. Okay. Now, could this market come and kick back down here and go to hell? Yes, it could. Do I care? No, I don't. Why don't I care? Somebody tell me why I don't care what happens to this trade now I've placed it. Somebody tell me why I do not care what happens to this trade now I've placed it. This is getting to our mindset and our understanding of what happens with trading. Why don't I care? Why don't I give the foggiest about what happens to it? Nobody knows? I've managed my risk, and it is what it is. It's not down to me. It's down to the markets. That money is gone. I put that money out into the markets. It's gone. I've managed my risk. So if I lose, I just say, okay, cool. Like, do you care right now if you have to go to the show, you go out, and on the way you go out, you went and you spent, £1.50 on a bottle of drink? Is that something that keeps you up at night? Do you start thinking to yourself, oh God, £1.50? My goodness, I better drink all of this drink. I better not waste any. I better drink. Even if you open that drink and that drink tastes horrible, you don't go, oh, I'm going to drink every last drop because I spent £1.50 on it. It doesn't affect you. Now, maybe if you spent £1,500 on that drink, you'd be like, listen, I'm not throwing this away. I spent £1,500, mate. You might be holding that drink a little bit more, strapping it in the car, in a seatbelt, putting it in a box. You might be looking after that drink a lot better if you spent $1,500 on it, because that $1,500 as a percentage of your worth or as a percentage of what's in your bank account is quite a large percentage. It's the risk on losing that is higher than you like, I lost £1.50. Who cares? I could buy another drink. It wouldn't hurt me. I could buy another drink, taste it, not like it, throw it in the bin and buy another. It wouldn't hurt me. This is how we trade. So I don't care what happens with this trade now. I want it to go to TP. I actually want it to keep, not only go to TP, but show me no reasons to get out as it continues its journey, breaks out of this little red level and gets at least up to this equal high for 190 pips. At least. That's what I'd like it to do. But whatever it chooses to do, I don't care. Because I've managed my risk, got in a trade, and I'm just like, you know what? Tis what it is. Yeah? And that's the only way you can trade, guys. If you're trading on some next thing where every time you take a trade, you're overly concerned, you're always going to make the wrong decisions. You care too much. You know what I'm saying? Like, if you ever bought a pair of trainers, I see man buy trainers and then they're like, yeah, no one should step on their trainers, no one should do this, no one should do that. Bro, it's possible, man. You're going to the club, there's 800 people in the club, and it's possible someone might step on your trainers. I don't know if that's a reason that you should bottle them, because they're just trainers. If you care about them that much, maybe you should have bought cheaper trainers or not worn them, left them at home in the box in the plastic. Do you understand what I'm saying? It's that guy in the club who that £1,000 trainers was too much. He was too highly leveraging those trainers. That's why he cares about them so much. Because as a percentage of his worth, they were far too much money. Then when someone steps on him, he wants to murder them. He's like, £1,000 trainers, you know? Okay. Maybe you should have bought cheaper ones then, bro. Because the rave is ram. People are spilling their drinks on the floor. And it's highly possible you're going to get your trainers dirty. It's the same when we trade, guys. We have to trade within our risk. We have to trade feeling comfortable. We don't want to heighten our anxiety levels, especially if we're trading our own capital. We want to trade to the point whereby we have bought a ticket You're not going to win the lottery without buying a ticket. Yeah? I have no problem with people who want to play the lottery, you know? Go and buy one ticket for £1 or £1.50, whatever it is. You going and buying 8 tickets or 12 tickets or 15 tickets, percentage-wise, probably makes such a small dent on increasing your chances of winning. I remember back in the days when we did the maths on it, it was like 1 in something mad, like 14 or 18 million chance. Probably worse now because of the way they've changed the things and added bonus numbers and stuff like that on, yeah? But I'm saying to you, buying like 6 tickets really doesn't affect your chances of winning that greatly from a percentage-wise. But if you don't buy 1 ticket, you're never going to win. Do you understand what I just said to you? If you don't buy 1 ticket, it's impossible for you to win. But if you start getting carried away, you've only got £20 in your pocket and you buy 9 tickets, and all of those 9 tickets cost you, £13.50, because I'm sure it takes like £1.50 each or £2. Who knows? £18. This one they're £2 each, and they cost you 80. You took £18 out of your £20 to buy lottery tickets, and you only increased your margin of winning by 0.00002%. That's stupid, in my opinion. Do you understand what I'm saying? That is stupid, in my opinion. Okay. It's like that's why they have syndicates at work, isn't it? You have a syndicate at work because then there's loads of people playing, and it does increase your chances ever so slightly. But you only bought 1 ticket. It's the same principle. You only put in a certain amount in, right? But if you personally didn't only buy 1 ticket, you bought loads of tickets, well, you're increasing your risk, your personal risk. All right. I hope we understand that. And that is the end of the session. Okay, I'll try and go back and take some screenshots and some analysis of what I believe for some of these markets, some of these pairs, and hopefully they're correct. If they're not correct, it doesn't make me an idiot. It doesn't make you an idiot. It doesn't make it be the case you don't know what you're talking about. It means that your analysis is either wrong, or it means that something else is going on in the markets, which we've already identified, could possibly be add some fireworks, yeah, because of what's going on tomorrow. Okay, CPI going absolutely berserk, which is going to take it from Alan himself. It's going to move the markets. We've seen previously when we've even checked out a couple of dates, markets have moved, double of what they averagely move, and we didn't even zoom into that data to see the volatility of how they moved. It might have moved absolutely crazy. That was actually one thing we didn't do. We measured the daily candle. We didn't zoom in to see whether it went up, then down, then up, then down, then up. We didn't see. Okay, so trade with caution, trust your analysis, stay the course, and understand that this is a skill. You must take shots, but you must take calculated shots and calculated risks. Okay, so on that note, unless Al wants to tell us something more, anybody else wants to talk to us or ask any additional questions, that will be the end of the session.
Jay, just a quick thing. You're on the 15th, you got the China. Yeah, that's very important. China unemployment rate and retail sales. Yeah. And also on the 14th, you've got the Japanese as well. You see, these markets matter because China is the 2nd biggest economy in the world. I think the Japanese are the 3rd or 4th biggest economy in the world. These matter. Yeah. When they come up as red folder news, please pay attention, because they reverberate around the world. All right. Not just the US.
Fantastic. Great information. Now, what was going to put on, guys, I was going to put on some information in regards, let me stop our live. So we are going live. We'll stop the live, and that will be a recording of the session today then, guys, for you guys to be able to see. So we'll stop